Ladies and gentlemen, boys and girls, children of all ages, I am your host. I am Phil Better. Welcome to the first ever podcast for stockbrokers for beginning from the group Stock Market for Beginners. I am Phil Better, one of the admins for the group. We're going to be bringing in two other of the admins as well as mods so that we can answer some of your questions regarding the stock market. Think of me as an everyday Joe, and I got these two great experts who are going to answer. First, we're going to bring in one of the great mods here, bringing in Johnny. Give me a second here. I'm going to jump off. Johnny, who is CEO of Wiseman Traders. He mentoring the eager to be wise. Johnny, welcome to the show. Thank you so much for being part of this. Give everybody a quick introduction so that they know who you are.
Well, first of all, I'm excited for this. I think it's going to benefit a lot of people. I'm Johnny Reyes. I'm a contractor, but I'm studying to become a certified financial advisor. So this has brought me a lot of success, and I'm really trying to help a lot of people and guide them towards the right path. So that's my goal and ambition.
Love it. That's the best way of doing it, helping someone become bigger. So thank you very much, Johnny, for being on the show. I'm just going to drop you off and bring in the next panelist, and then we'll start in the show. And if anybody wants to make sure comment is read live on the air, just comment in the down below, and we'll lovely read that out to you. Let's bring in my man, Tony, who wasn't expected to be there. Hi to Tony, as well as to this lovely Facebook user. Tony, who is the host or one of the hosts of the Stock Bros podcast. Tony, welcome to the show, and please give us a bit more about yourself.
Yeah, so a lot of people here know me. I've been in the group for a while now, and there's Lloyd. Shout out Lloyd Ross. This group isn't just about investing. This group is about finance. This group is about bettering yourself, and it's about making smart financial decisions, becoming a wise investor. And we want to give people the path and the knowledge to the path to building wealth, and we want to help people do it in a smart manner without wasting your money on poor penny stocks and stuff like that. And I started my own podcast with my brother, as many of you know, and I'm not a certified financial advisor. I do have a degree in economics. I have been pretty good about saving money, and that's been my mantra for years now. And I've just recently started a financial literacy and investing 101 course, which I'm really excited about. I'm really proud about.
Amazing.
And I can't wait to share it with everybody. It's just back to the basics. We're starting right from building a strong financial foundation from the ground up and working on creating all the way from creating a budget to your first step with whatever you're going to buy in the stock market. And it's just a journey of, if you're starting out with nothing, and hopefully this will bring you on the journey to build wealth, start a path to building wealth.
Exactly what our generation needs, and I'm more than happy that you're bringing along, because you do bring a whole bunch of wise advice to the group as one of the admins. So here we all are. We're all the admins here of the group. You have Tony to my left or right, depending on how you look, and Johnny down below. Nothing wrong with Johnny being down. He's the top of the pyramid. He supports us with his knowledge because he's doing it because he actually mentors people. So that's great. We're going to just start off. We don't have any news of the week, but we did ask for some questions in the group. So we're going to start with something from Sean Marcotte Sr. He asked, what is a good profit percentage achieved where it's a comfortable time to withdraw your initial investment and run solely on the profits? So I'm going to start with Tony. Why don't you give us an answer to that?
Well, the answer to that is it 100% depends on what the stock is. If it all depends on when you want to, if you're invested in something like Apple, and you have 100% profit on it, Apple, I don't see Apple going down in the future. I see it going up. So maybe you ride it out a little bit longer. If you're invested in something that is more risky and you don't have the risk tolerance needed to be messing around on OTC markets, but you have a decent profit, you have like a 20% profit, 25% profit, I'd probably take my profits and get out, you know?
Okay.
So
Good 25% profit is great to put back into the thing and just play with the profit while you enjoy.
I would invest that profit into something more long-term and more reliable. So.
Okay. Johnny, how would you answer that question? What percentage would you decide of profit where it's time to take it and move it into something more secure, or reinvest into something to make more profit?
Oh, for investments, I usually only sell my investments when they're overvalued. So this question for me is more for trades, and for trades, I usually have my own goal on every single stock. It's usually different by the market cap. I usually set a specific percentage goal, which is usually 20 through 50%, or sometimes 100. And after it reaches that, then if I believe it could still grow, then I'll take out my original investment and leave nothing but profits in there in that scenario.
The
There
key
you
is
go.
to set a stop loss. If you're in something risky, set a stop loss so you get, set it to 10% profit or something, so you're getting out of that investment with some type of gain. You
Yeah.
don't want to lose it all. So
Right.
And so you bring up the stop loss. Could you guys share that with us? And shout out to the user for sharing this with all your friends. Please do share it with everybody. If you know anybody who's interested in the stock market, who wants to become an investor, do let them know this about the show. Share it with them. Again, we aren't financial advisors. We are just people who have spent time learning and spending money learning about this, and we want to share and help you guys use the knowledge properly. So again, this isn't financial advice. Always speak with a financial advisor because they're paid and they went to school and they know the rules and laws. But what is a stop loss, Johnny? Could you guys maybe, if you can explain that a bit more, or if you're not sure, we can go with Tony.
It's setting a order for if the stock may drop past or to your target, it will sell it instead of still losing.
yeah.
So it's basically pre-filling an order. So if the stock actually gets to that number, it's gonna fill, so you won't lose any more percentage above that.
Yeah,
Okay.
say you have a stock at $10 a share and it jumps to $20 a share. You can actually set a stop loss, so you could set it to $15. So if the stock falls back to $15, it will automatically trigger a sell and it will sell all your shares, so you can keep your $5 profit. You don't lose it all. So
Okay, that's an easy way of hedging your bets. In essence,
yeah,
you're making sure you walk out of there. You're walking out of the casino of the stock market with money. I love it. We actually have our first question. It's from Patrick. So we're going to bring this up on screen. Patrick is asking any suggestions in distributing portfolio ratios between ETF and stocks for a beginner. Now, either one of you boys want to hop on there? We're gonna put this like this. So, Tony, you're on the hot seat right now. Let's answer about Patrick's. Patrick question. Sorry if I mess up your
Patrick,
names.
I'll try to help. Yeah. So here's the thing about asset allocation with portfolios. You can do all the research until you're blue in the face, and you can ask 10 different financial advisors, and you'll get 10 different answers, because I've done it. And there is no perfect way to build a portfolio. It's 100% based on your risk tolerance and your time horizon. And as far as asset or allocating between ETFs and stocks, I would say, in my personal opinion, it's a really smart idea to have most of your money in ETFs and in like historically high performing ETFs like in S&P 500 or a NASDAQ, and have your money parked in that as your foundation, and then build around that foundation with some stocks, whether you want to make it 20%, 30%, 40%, whatever. But I would say it's a smart idea to make the larger portion of your portfolio and your base out of ETFs. So.
All right. We're going to bring up our other panelists because it's only fair that we give them equal opportunity to answer. So here's Johnny. Give me 2 seconds, Johnny. I'm just going to put your. Oh, wait, sorry. That's another guy who couldn't make it tonight, but shout out to him because he is going to be a part of the group later on. But here's the question once again. Distributing your portfolio ratio between ETF and stocks for a beginner. How would you answer that, Johnny?
So for a beginner, beginners should be sticking to ETFs more because as a beginner, who really knows how to evaluate a company properly? So for a beginner, it's better to stick with ETFs. You should at least be around 80-90% into ETFs and maybe barely dipping your toes into the water with individual stocks for beginners. But as time grows, this is the stock pickers market. So it's all about building our own portfolio. So like basically building our own ETF for our personal self. So that's what the goal is. So for beginners, it's ETFs. That's why we push ETFs because it's a stock beginners group, and it's there's so much less risk tolerance in the ETF because you got a bundle of stocks instead of just risking your money into one company and putting your money into one CEO's hands. So for a beginner, ETF should be weighing down your portfolio.
Excellent. No, it's something that. Just give me 1 second. I'm doing this all by myself. People, give us a break, please. Here we go. There we go. I'll get mine here.
I
ETF.
I just want to take a second. I want to take a second to say thank you to everybody in the group that participates in all these, and we appreciate you so much for, especially Johnny and I, because we've been in the group for a long time, longer than everybody else. So, and all the love that we get from our podcast and people contributing to watching and subscribing, and it's amazing. And we appreciate all of you, and thank you so much. But I'm sorry to cut you off, Phil. Go ahead.
Thank you. No.
Damn it, I was too slow. Let me bring myself back up here. Yes, as Tony was saying, thank you, everyone. All the 13 of you who are watching right now and the 2 people who have given us love, and everybody shouting out in the comments down below. Please continue. It's the reason we're doing this is because we want to help you build your wealth and become wealthy for whatever it is your decision. Moving on, we do have a question here that does pop up quite regularly. Investing in cryptocurrency. Right now, it's a hot topic, with Dogecoin, Bitcoin, and all the different cryptocurrencies. We're going to start with Tony, because we started with Johnny last time. Tony, what is your take on the crypto craze going on right now?
So here's my take on cryptocurrency. Only invest what you can afford to lose. And crypto has no rhyme or reason. It's hard to analyze crypto. You can't do a financial health check. There's no balance sheet if you're going to be looking at an individual stock. You can't do that with crypto. It's a lot of feel. It's a lot of nostalgia, user sentiment or buyer sentiment, what's going on in the world. And personally, I think Bitcoin seems to be the winner. I wouldn't be surprised if it goes up to past 100,000. But as far as crypto, I really can't give you anything because it's so random. And you just got to invest with caution and just only invest what you can afford to lose in crypto because it could go up 10% tomorrow and down 10% the next day. It's very volatile. So.
Right. And give Johnny a chance to answer their question. Once again, the question was investing in crypto. What's your thoughts? Have you invested in crypto? What are your thoughts on crypto? Is there a secret to it, or is it just like Tony said, flipping of the coin?
Well, I've invested in crypto. I've invested in Bitcoin and Ethereum. Those are the ones I'm invested into, and I believe they will continue to grow until the digital dollars and yuans start coming out. But in the meantime, they're gonna keep thriving. But as far as all the other cryptocurrencies, I see them as strictly trades, and exactly like Tony said, only put money that you're willing to risk into those type of cryptos, especially Doge, XRP, all those. I trade those too, don't get me wrong, but only with money I'm betting, basically. So the only ones you really should be investing into is pretty much just Bitcoin and Ethereum because If you search videos, there's a real revolution behind those, and it's mostly speculative, but there's a lot of movement behind it. So
I,
it's definitely something
yeah.
to invest into. But all the other cryptocurrencies, I say no, those ain't investable.
Just stay away from
Here's
those.
here's the
Stay
thing
after the big
though
ones.
with Johnny. I think you would agree with this too. The thing with cryptocurrencies and why they're so popular is because a lot of them are decentralized, and Bitcoin actually has a market cap. So it's kind of like a hedge against inflation and against the US dollar and all the other currencies,
Yeah,
where because the interest rates are going to be going back up and we printed all this money is not going to be worth as much. Your dollar isn't going to be as valuable as it was today as it's going to be in a couple of years. So I guess people are really expecting or using Bitcoin as a hedge against inflation. That's basically what I think it is.
yeah, that's
I think,
beautiful right there.
yeah, I think that's a great sentiment. Once again, everybody watching, if you're not able to share it, it is because the group is a private group. So if you do want your friends or family members to join, do invite them into the Stock Market for Beginners group, so that they can be able to learn from us. They do need to answer all the questions because we do want to keep this a very tight knit, smart community for beginners and not people who are trying to scam, use to steal your money. We want to make sure that you're investing wisely. That's why we're cautioning you against putting your money into penny stocks or things like this if you don't understand how to evaluate a company like Tony has and Johnny has as well. We're not putting down penny stocks. There are the possibility for you to gain wealth from, but as a beginner, probably the safer bet, stick with the ETFs, which actually brings me to my second question that we got from the group. This is from Arthur P. Metal. I believe, I apologize if I'm mistaken your names, but this is what are the top 3 ETFs you guys personally invest in? And Johnny, we're going to start with you because you're on top, and it's just simpler that way. So Johnny, what are the 3 ETFs that you personally invest in or you recommend beginners invest in to start seeing some sort of growth?
Well, of course, the top one is VU or SPY, but I'm personally more invested in or only invested into VU. That one tracks the S&P 500, so that's something that should be in everyone's portfolio because those are basically the top 500 companies in America by market cap. So statistically, they've been growing well, not every single year, but 9.3% average through every single year. So VU is the top one that we always recommend. The second one, I'm real big in renewable energy. And the one I keep adding to, and especially now that it's getting knocked, is renewable energy. And the ticker symbol is TAN, TAN. That ETF, I really have a lot of
Love
faith
for.
that it's gonna grow over this year because I think it could possibly go back up to about 120, 130 where it was, which is about 50% where it is now, 50% higher. And probably the third will probably be DIA to follow the Dow Jones. The Dow Jones has a lot of phenomenal companies, and that one should really be in most people's portfolio as well.
Well, it also makes sense to go into the green energy with Joe Biden's new plan to invest so heavily into it. So obviously that second one, the 10, will probably more than double for sure in the coming
Yes.
year if the infrastructure bill can go out. Tony, pulling you onto the screen now. What is your 3 top ETFs that you believe in that you recommend to people that may be your secret to your wealth growth?
Well, I won't talk about mine because a lot of people know what I have. But if you're just starting out, I would say an ETF that you might want to look into is VTI. VTI is the entire US stock market. It's large cap, mid cap, small cap companies. VTI, it's diversified. It has growth stocks, value stocks. It has over 3,000 stocks in it. And in the past 10 years, it's averaged about about 13.5% return per year over the last 10 years. So I think it's actually on par with VOO or the S&P 500. And obviously the S&P 500, like Johnny said, I totally agree. For 90 years, actually, the S&P 500 has returned on average 10% per year for the past 90 years. Some years it's up 30%, some years it's down 30%, but on average it's 10% since the life of the fund. Another one I would have people, or that people should look into, I would say, other than Dow Jones, is something like maybe QQQ. QQQ has been around for a long time. It has a good track record. That is, they track the NASDAQ top 100 non-financial companies. The NASDAQ is the second largest stock exchange in the United States. The NASDAQ's not an index fund, it's a stock market or a stock exchange. So the QQQ gives you exposure to the NASDAQ stock exchange, and you get the top 100 companies on that. So, and that's a growth ETF.
There we go. That Tony coming in clutch with that. There we go. Sorry. I don't have I'm not using a mouse. I'm using a trackpad. I'm old school. I hit the mouse, clickety click.
Sorry, you're doing good, man. You're doing good.
I'm trying my best here, people, and it's going to be better. I've ordered the equipment to make this stream even better. But still staying on the ETF, you mentioned, Tony, the small cap ETF. So we have a question from Richard Daniels. He's wondering, better long-term investment, small cap ETF, probably from Vanguard, since I already have VOO, or Apple stock. Now, this is something people want to know. We see a lot of stock questions, not necessarily Apple, but penny stocks to big companies. So, Tony, since you were the last one to answer, I'm going to throw you back up here because people want to see your beautiful face. Which for you, is it VOO or Apple? You have to make a decision, $100, where you're putting it.
Well, as he said, a small cap ETF, right? Or Apple, or
small cap. He's going with VOO in this as an example, since he already owns it. VOO.
Oh, he's okay.
Or VO, I don't know.
Well,
look, I'm just the host. You guys are the smart people.
I think the small cap ETF through Vanguard is VO or VB. It's one of those. Small cap. I think small cap definitely has a place in your portfolio. My answer to that question would be both. I would say buy some Apple and buy some small cap ETFs, because small cap have a large growth potential. So these are typically companies that are still new. They're starting out. They haven't had their big growth yet, like the large cap companies. There's still a lot of room to grow. And they have done pretty well, actually. I think over the last 10 years, they've done really well. But they're also more volatile and they're more risky. So like I said before, it's all based on your risk tolerance. Me personally, if I had to put $100 into a small cap ETF or Apple, I would probably put it in Apple, to be honest, because I'm just going to get more bang for my buck with that because I think VO is like a couple $100 right now, and Apple's like $120. So I can almost buy a full share of Apple. Yeah.
Okay. Fair enough. Johnny, we're going to bring you up here now to answer the same question. If my trackpad, it works a bit better. Same question. You have $100, small cap ETF. I don't know if we're going with Vanguard's small cap ETF or Apple. Thank you, Tony. Who are you going with and why?
Personally, I'll be going with Apple because I don't pick up any small cap ETFs because I get my individual stocks that are small cap, so I really don't need an ETF for that. So that's just my me personally right there. But I'll choose Apple almost over anything because Apple's just a juggernaut. Like, it's in everyone's pocket, and the ecosystem of it is just so strong, and it's just connects everything, and it's making everything simpler for everybody. It's getting people more lazy.
So it's VB is the
VB for Vanguard small cap. Excellent. Thank you so much.
And I think Johnny made a great point. He said he buys his small cap companies, and that's an excellent point because there's a lot of junk in these small cap ETFs.
Yep.
There's so much junk. There's probably like 25 great companies, and the rest are just like mediocre junk. So that's one you're better off picking stocks with.
Yep.
Okay. So just another question. We're just going to get there. First, I want to thank all the 17 of you who are watching right now. Make sure if you have any questions for Tony or for Johnny, do let us know. Just comment and we'll be able to read them right away for you. Tony, final question here. We're going on 30 minutes, trying to keep this to a tight 30 minutes. What do you about, we have something from Dalt. He was supposed to join us. Unfortunately, he's a little busy, but you have the shift away from growth stocks and towards value stocks. What's your opinion on this? And we'll get the same for Johnny as well. Go ahead.
Well, you know, when we were locked down last year in the pandemic, tech stocks took off. And we had an unbelievable growth period in such a short amount of time. I mean, we saw companies like Tesla, which is a car company mostly, and they make solar panels and stuff, but they shot up like 700% in a year. And Apple shot up huge, and Microsoft, all these tech companies, a lot of these are growth stocks. They all shot up huge because we were locked down and tech just took off. So now we were starting to see the shift where the NASDAQ has been dropping a lot this year and people are taking their profits because people know it's not realistic to keep seeing hundreds of % gains in a year. So people are taking their profits and reinvesting that money into other things like banks, travel companies, and stuff like that. So yeah, there's a clear shift away from growth to value. But that doesn't mean growth stocks are going anywhere. We know Apple's not going anywhere. We know Tesla's probably not going anywhere, even though I don't agree with that they're worth that much money. But so
there's going to be a market correction, of course, because right now it's like we're in the you can think of it as a mini .com boom we're having right now, but in the electrical, the green energy, if you will.
My whole thing about whether we're in a boom or a recession or a correction, it's all like many popular famous investors have said, the successful ones like Warren Buffett, don't try to time the market. It's about time in the market. Just keep investing, keep dollar cost averaging into really good companies. And when the drop finally comes, which it will, then you just double down and you buy into those great companies and you get them at discounts. So.
Excellent. All right, we're going to bring Johnny up here to answer the final question regarding. Nope, wrong one. One day I'll get this right, probably the next show. But before we do anything, Nola, thank you. This is actually for you guys. Without you guys being in the group and sharing and asking these questions, we wouldn't be able to do this. So thank you more than that, especially the 25 of you who are live right now and everybody who watches the replay. This is strictly for you. We're not doing it for fame. Secretly, I am, but because I want to be Patch Sage Act. There's a little bit of fame wanting here, but of course, this is strictly to help you guys. No, again, thank you guys again with all this love. So the question again from Dalt was the shift away from growth stocks and towards value stocks. What's your opinion on this, Johnny? Please enlighten us.
Yes, well, if you look at almost any stock from March of last year, has had quite a big run up, especially the growth stocks. If you look at Zoom and all these tech stocks, like they've gotten a beating during this past month or so. So it's definitely a rotation in the market, getting out of those overvalued stocks, and it's time to get into stuff that's actually going to be producing income. Like everyday commodities are going to be a good investment. Crude oil, gas prices have gone up, and the earnings are going to be a lot better than the previous years. So the rotation is it's already happening. So we have to get to it, because if you were in Zoom at the highest point, you've taken a beating. It's time to get into the value plays, the utilities. All of us are paying utilities. All those stocks that we need in our everyday life. Those are gonna shine.
Excellent. Thank you very much. All right, so I'm going to try to do this. There we go. On the screen. So first of all, everybody, again, we want to thank you for joining us for the first ever Stock Market for Beginners show. The name will be worked on. We're just doing this. We want to get
You don't like
everything
that name? Stock Market for Beginners live show.
We'll work on it. I'm not going to say it's bad. We can workshop it, but first off, we want to thank you guys watching here live for watching the replay, or even if you're live, thank you so much. We won't be making this into specifically a podcast for you guys to listen at your own time. Plus, it's always going to be in the group, so you can watch this live. I'm going to sign off quickly here, but I'm going to throw it to my two co-hosts here. Again, we want to thank you. Tony, please let us know where you guys can find us, find you, as well as your course, because you do have that course coming back. So let us know before we sign off.
Yeah, thanks a lot, everybody, and I appreciate it. And really, like you said, the goal of this show that we're doing every week is actually going to evolve into talking about stock market and investing news for that week. We're not going to just do questions and answers every week, although we'll take some questions. It's going to be more focused on what happened that previous week in the stock market. But yeah, you can, everybody knows where you can find me. It's the YouTube Stock Bros podcast. I'll put the link in. And yes, the link for my course will be out soon. And I appreciate you all. And as always, when you sign up, obviously, after you watch it, I could still help you out if you have any questions. And there will be a quiz at the end. There's like 25 question quiz. So you have to pay attention. So just
there you go, ladies and gentlemen. Tony, teaching you like how you were taught in school. Tony, thank you so much. Stick around. I want to talk later.
Thank you.
Throwing Johnny here. Johnny is, of course, the CEO of Wiseman Traders. Johnny, tell us a bit more where we can find you, how we can support you, and again, thank you for being on the show.
Yeah. First of all, thank you to everyone that supports us, that likes and subscribes to our YouTube and all of our content that we put out. Thank you guys for all the support. You could find all my content at wisemantraders.org. As you see at the bottom of the screen, I provide those basics. I give you guys links so you guys can learn about all the basics, and then there's also a Q&A chat room, a 24/7. I try to respond as much as I can for all my clients, all their questions and everything that they are struggling with. I take the time to give them the knowledge so they could be successful.
Excellent. So make sure you check out wisemantraders.org. That's with a Z, not an S, to get more with Johnny. And he is, if you're in the group, thank you. You know how much love he brings to you guys and knowledge. And then finally, last but not least, I am, of course, your host, Phil Better, the John Doe of stockbrokers. I am you guys' you watchers, your viewers, your listeners. I am your go-to person to ask these experts. So make sure if you have questions, DM me, write them back on this show. We love you. We want to help you get better. If you want to learn from non-stock brokers, but you want to learn to improve yourself, how entrepreneurs have done it, you can follow me at investinyourselfpod.com. There you can listen to my podcast, Invest in Yourself, the Digital Entrepreneur Podcast. But I am Phil Better. I'm your host. I'm looking forward to doing this weekly with you guys. Remember, this is just educational material for you to be smarter and wiser in your investing. But please do talk to an actual investing advisor that can help you build your wealth. And again, thank you for tuning in, and we will see you next week. There's the end broadcast. Bye.